Tidjane Thiam, thank you so much
for
speaking to Bloomberg.
Thank you for having me.
As always, thank you for your time. You're midway through your 3-year overhaul. How's it feeling?
It's feeling good. We think that the strategy is working. As you said, it's 18 months out of 36, and we believe that on all the things that we identified as key, we are delivering. We said that we had a challenge in growth. You've seen that we've generated almost 23 billion of NNA in the first half. That's our best performance since 2011. So that's very, very good. Knowing that 11, 12, 13, 14 were very good years for wealth management, so that's very good. Growth is back. It's profitable. Profit is up 21% year on year in our wealth management divisions. We said that we would resolve the capital issue. You've seen the capital raise. We're now at 13.3% CET1. We said that we'd cut cost. We've cut 1.9 billion in 2016, 600 million in the first half. We are well ahead, actually, of our target of 18.5 for this year. We said that we would reduce risk.
Yep.
Risk is 47% down. And we said that we would resolve the legacy. And we've dealt with the DOJ. And the SRU is half the size it was 18 months ago. So we've been busy growing, cutting costs, raising capital, cutting risk, and dealing with legacy. So for 18 months, we think the teams have worked very hard and done a good job.
So on those 4 points, what are you most proud of? You've been leading kind of on all sides, but is there one thing that you found more difficult than the others?
Look, luckily I didn't do any of that alone. So it's been a joint effort. And no, they're all difficult, really. And actually the most difficult, I've driven those 5 in parallel. It's very difficult for any company to grow. There's a lot of competition out there. Very difficult to cut cost at the same time, to raise capital, to cut risk, and to deal with the legacy. I think it's really what is, I think, interesting about our story is that we have really driven those priorities in parallel and at the same time.
Talk to me about the wealth management.
But revenue is up 9%,
yep.
Cost is down 6%. So we've really done both. And that operating leverage that we are creating is what's driving the profitability.
Revenue is beating expectations, but flat somewhat. Will that change?
Well, no, it's right on expectation, but it's up 9% over a prior year. So it's not that it's 9% right. is very good growth. If we could grow revenue 9% every year, that'd be in financial services a very, very good performance. And then there are bright spots. If you look, there are other areas where revenues grew even faster. Revenue even grew in Switzerland, and that's the first time. And actually, if you look at the SNB statistic, the Switzerland market has gone backward 3.2%. We grew 5% our revenue. So we're gaining market share in Switzerland.
On the Swiss bank, it's one of the 4 units with the highest returns on risk-adjusted capital. Yes. So does it validate actually your strategy?
Well, we've always said we could grow PTI profit in Switzerland. Profit is up 14% from over 2 years. So the traditional view was it's a mature market, you cannot grow. But I think we are. Thomas Gottstein and his teams are showing that we can actually grow. It's a very attractive market. We've always believed that. The Swiss Universal Bank is a very good model, and it's the only country where we are a universal bank, and we can play on every level. And it's a good story. Cost is going down, revenue is going up. So that pattern you'll see across businesses. In IWM, International Wealth Management, revenue is going up strongly, cost is going up less. So you have those jaws opening. In Asia, same thing. In wealth management, revenue is going up very strongly, cost is going up less. So you have positive draws opening in all those businesses. And finally, global market. I should really talk about global market because it's a huge turnaround. We said that we would hit 6 billion of revenue in 2018. We did 3.2 in the first half of 2017. And there was a lot of skepticism that global market could be turned around. It's profitable for the second quarter in a row. So all these are bright spots.
So the wealth management, the trend that we're seeing in this quarter can continue?
We are working hard for it to continue. The thing we are doing is really staying close to our clients. If you take international wealth management, we have something called Priority Solutions, which is a team of elite advisors who design customized solutions for our clients. And what we've seen, this is where you see the transaction income and the recurring income going up so strongly, because we've been able to increase the number of mandates. Mandate penetration is now at 30%, so we're getting more fees for the assets we have. The asset base is higher, and mandate penetration is higher. And in Asia, it's the same thing. We have this integrated approach. I was just looking at a transaction we did where we helped a Chinese billionaire buy a 400 million pound building in London. Well, that involves our financing team in Asia, our wealth management team in London, our real estate capabilities in Europe. We're number 1 in real estate in Europe. And it allows us, that integrated approach allows us to sell. And the other point is a lot of net new asset you're seeing comes from our largest clients. There is the next layer of clients that we haven't even started penetrating. So the reason why we're confident in this growth is that a lot of it comes from working better with our existing clients.
Right.
This is a vital point. People think that we're out there recruiting RMs, recruiting new clients. All this growth comes from working in quality on the clients we already have inside the bank and penetrating their wallet.
Where do you see as areas of growth in the global markets, and what makes you optimistic?
Well, we're optimistic globally about the growth. Europe is coming back strongly. Emerging markets have held up. The US is growing at a reasonable level, so all that is positive. Where we have been challenged, and you'll see that in the numbers, is really by the low volatility. I think volatility hit 8.83 yesterday. It's unimaginable, unprecedented, and it has an impact, obviously, on the levels of activity of clients. And you always have a seasonal dip in Q3, which we are seeing in July, and that's expected, and we're flagging it in our outlook. But more important are what we call the long-term tailwinds. We really have long-term tailwinds. The wealth in Asia is continuing. Asia is incredibly strong. We find a lot of business there. But IWM has been the bright spot. IWM is international wealth management, has 40% of the world GDP. That's what I always tell the CEO when we discuss. I say, well, I don't need to tell you that you have a lot of growth potential there, because he has Central and Eastern Europe, Middle East, Brazil and Mexico, Africa, Europe, Western Europe. And really, if you look at the first and the second quarter, very good growth in the first quarter and acceleration in the second quarter. So this dynamic of staying close to the clients, having the right products and services to offer them, and dealing with as well the asset side of their wealth as the liability side. Okay, we help them manage the wealth they've accumulated, but we also help them borrow from us and monetize their wealth. Is very powerful, and really this growth is excellent. You've seen everything going up: gross margins, net margins, flows, and there's more to come.
On global markets, do you see any signs that volatility is picking up or will pick up?
Not yet. Really, we haven't seen that. Look, we have a diversified platform, so yes, equities has been under pressure. Although equities is up 5% for us, but the area where volatility matters, so macro derivatives have really suffered, and there we're market dependent. But that goes back to our strategy. Yeah. The reason you have basically two types of activities in the bank: the kind of annuity-like, long burn, regular activity earnings that we get from wealth management, and the more volatile market-dependent activities, which we have capped in our strategy, and we're growing the rest. So it makes us, over time, less dependent on the volatility of the market, which nobody can control. Okay,
and so actually this is a key point which I want to ask about, is that you're becoming more of a wealth management bank, but you still have such a huge markets unit, so that will change by basically growing the wealth management, not necessarily shrinking the markets unit.
No, exactly. Well, it's huge, yes and no. It's at 54 billion of RWA. It's a significant player.
It's a big chunk.
Yeah, you need enough size to be a meaningful player. But we've capped it, and it has not grown for the last 6 quarters. So there, what we are doing now is improving the profitability. And yes, the rest, when you see 20% year-on-year growth, that's doubling every 3 or 4 years. Our wealth management profit in Asia is doubled 2 years ago at 403 million versus 200, doubled in 2 years. You see that RWM is up more than 60% over 2 years. So that growth dynamic will over time change the shape of the group.
Amongst your unit CEOs, do you have a star cost cutter?
No, it's a joint responsibility. I always say that cost efficiency is like breathing. It's not optional. If you don't breathe, you will die. So it's a discipline that cuts across. And the reason this program has been successful is that it's owned by everybody. We have a CEO who's doing a great job, Pierre-Olivier Bouet, but every Tuesday when we get together, we go over weekly the progress of the cost program, and everyone has his bit. And also part of the strategy we followed is how I've organized the group. I've transferred, that's not visible from the outside, but I've inverted the P&L of the CEO. It used to be that 60% of the costs were allocated to him. Now only 40% of their costs are allocated. They control 60% of their P&L. I've transferred a lot of functions to them, and what you see every time you do that is that the rigor with which the cost is managed is just much stronger, and they apply themselves pressure on the support functions to be more efficient, and you see that flowing through our numbers.
Tidjane, two very quick questions, because I know you have a million other meetings after this.
But thank you for having me again.
First of all, are you optimistic about the future? Are there more tailwinds than headwinds when it comes to the global economy?
Oh, that's a tough question. It's always difficult to make forecasts. I'll say that long term, I'm always quite optimistic.
Yeah.
The short to medium term is very, very difficult to predict, because there's so much uncertainty due to geopolitical events, political central banks that are extremely, extremely hard to forecast. But we think that the waves we're riding of the increase in wealth creation in emerging markets and developed economy is there to stay, and is driving the numbers that you see. And
finally, on Brexit, I have to always ask you about it. Have you made up your mind on how many people will move from London and where they'll move to?
No, we haven't. As you know, it's a relatively fluid situation. There's still a lot of uncertainty. We are looking at a variety of options and working very hard on making sure that this is resolved. But look at what we've talked so far. Does this really impact our long-term global wealth management strategy? Probably not. So it's important, but we think that whatever the outcome, it will be manageable.
Tidjane Thiam, thank you so much for your time today.
Thank you, Francine.